Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 p.m. here, which makes it midday UTC. Do apologise for the delay, everyone. We had a couple of technical issues, but we're now live and ready to go. Do let me know that you can hear me okay, and also if the visuals are coming through. So today, I wanted to do something a little bit different. So we've got a really cool partnership with BITGET, and they've put on a trading competition for us, exclusive for Nest Club members. So first of all, if that's something you're interested in, you can find the details down in the comments section, in the description. And you can sign up, you get a free trial, come along and join the Nest, find out what it's all about, and then you can get entry to the BitGet competition. All right, so there's $10,000 in prize money being put up exclusively for our members. So what I wanted to do today was look at the charts, pick up where we left off from last week, but then show you how I'm going to use how I'm going to approach this trading competition. All right, Sorin, Hangry Patrick, thank you very much for the confirmation, guys. So yeah, I thought give you guys a little bit of an insight into how I like to trade lower time frame charts. Tony, hey, all the way from Australia. And just show you some really cool scalp setups, really, or not cool, but just show you how I do it. If you guys, take something from it, or if it's something that helps your trading moving forward, then fantastic. So we're going to be on the BitGet charts today. Let me just clear some of this up. And I just want to run through with you how I'm kind of looking at this, how I want to approach it. So I've got an hourly chart up here, and this is going to be my high time frame chart. Karen, hey from Phoenix. Hey there from London. Thanks for joining the stream, guys. Really do appreciate it, everybody that's on here today. We've got a really good turnout. So for anyone that's interested in trading low time frame charts, then the one of the things to remember with price is that price is fractal, right? So we see the same movements across different time frames. So it doesn't mean that this method can't be taken and put on higher time frame charts. It's just for any kind of competition basis, what I like to do personally is I like to set a little bit of money aside. You only need $250 to enter the BitGet competition, and they don't take that money, right? That becomes your trading capital. And you don't need to enter with tons of money, right? Because it's based on, a few different things for the prizes. So your P&L is one of them as a percentage. So it doesn't matter if you've got $250 in there or $25,000, okay? Then there's ones based on volume, etc. It's really, really cool. Go and check out the link, guys, see if it's of interest. Lord Tang, hey, buddy. Mohammed, when did you start? A few moments ago, bud. You've not missed too much. We just had some technical issues. So what levels have I got marked on the chart at the moment? So my interest when I'm looking at these is looking for where liquidity has been swept, all right, and where we might see some reversals, because we want to tap into the chart. If we can find the right points of reversals, we don't need to jump straight in and take super risk, but we can wait until we get that little pullback and then find a good entry on a secondary sweep. So on the hourly level here, what we can see is how price has moved around. We came down and we set this low after a really sizable drop. Okay, so we expect a little bit of relief. When we've marked the low down there, we can see price has come in. Let me zoom that in a bit for you guys, actually. Price has come in down here, has taken the liquidity below here, all right, before then moving up. We've then set this high. Price has then retreated back. We can see a few more liquidity sweeps of the lows as we're moving here. Then we've always got our eye up here, right on this high. So as price has come into this level, we've taken the liquidity up here, started to come back down. We've then come back up and set this high, all right, but still not taking liquidity above this. Then when we've run this high here, the market's shown us with quite an aggressive move to the downside that it's ready for lower prices, all right? So what we're trying to do is we're trying to find an edge as to how we can find these positions before they develop, right? And the best way to do that is to mark our naked highs, all right, or our highs that haven't been run, or our lows. And then we wait to see price interact with that. And then we're looking to see how price action develops on the lower time frames. I'm personally going to be using a 1 minute time frame because I want to try and maximize the amount of trades that I can get out in a day and also the risk to reward. Like I say, this is a different approach that I would be taking with my regular trading account. I'd never, ever risk more than 2% on a regular trading account, but that has obviously my trading balance in it. What I've done is just taken a very small amount out of that account and set it aside in a new account that I can trade with for this competition, so I can be more aggressive. You don't have to follow the same approach. I'm just saying exactly sort of how I'm looking to do it. So getting this principle in our minds here, where we can see the liquidity being taken, price starting to break back down, we get these second liquidity runs before we have the big sell-offs. So what we want to do is be aware of the key highs and lows. And if we zoom in to today's, which we can see on here, all right, what we can see as we look back is the same story playing out, okay? So price set this high, price ran up into this high, took the liquidity. We then set a new high, which is here. Obviously, this will look a little bit clearer on the lower time frames. Price has then come up, run this high, then we've come down, closed below. All right, then when we close the candle below, we get this wick back up into this area, which then allows us an opportunity on a lower time frame to start looking for shorts, okay? And we always want to make sure that we've got a clear target in mind. So looking at the breakdown of this move here, we're saying, okay, well, if we're going to drop from up here, and our belief is that we're going to hunt for liquidity lower down, we obviously want to be aware of these lows, but this would kind of be our ultimate target down here, and then eventually these lows down here. Now, what we can see here is we didn't quite run these fully. Now, on a lower time frame, we might have an order block in there or something, and price has just been front run a little bit, but we can see the same principles when we move to a lower time frame. All right, so if we move, say, down to the 15-minute time frame, what we can see here is exactly the same. So price comes down, sets this low. All right, so we then sweep that low. Yeah, here's the high that sweeps the low, becomes our first liquidity sweep, sign that there's a reversal. Then what we're going to do is we're then looking for these lows here, right? So we would first mark this low. Where's the high that swept that low? It's here, but we don't close above it, right? So then when we set a new low down here, and we sweep that low, this is the high that sweeps the low, and then we're looking for our entries around here, okay? So obviously you can do this just by reading into the price action and moving through the different time frames on the charts, but something that I like to do is take the 15-minute RSI, make this a little bit bigger for you guys. Now, where I'm interested here is I'm interested in the momentum, right? Now, the momentum may be that it's a correction in an ongoing macro trend, or it might be that we're facing a reversal. Either way, as long as we've got a reasonable risk to reward when we enter the trade on the lower time frames, what I like to do in these setups is I want to wait for price to get to 1R, and then I'm going to either take a little bit off the trade or I'm certainly going to move my stops to entry. That way, if I'm wrong, trade reverses and we don't quite get that push, then I'm not losing my capital, right? And capital preservation is really, really important. So let me just tidy these bits up here. So show you something you guys might find interesting. Certainly helps me when I'm looking for these kind of reversal points or these pivot points in the market. What I'm interested in is when price is up in overbought or down in oversold. Okay, so for those of you that aren't aware, we've got the lines on here. So we've got our bottom line here, which is this thin grey line, and I'll zoom in for you here, which is set at 30. Yeah, that's our oversold zone. This small dotted line here represents extreme oversold, which is down at 20. And now we've got the opposite up here for overbought. The solid grey line here represents overbought, which is at 70. And this dotted line, the very thin one up here, represents extreme overbought. Now, you don't need to worry about the extreme overbought one. I'm interested in just overbought, oversold. All right. So what I'm going to do is just with the data that we've got in front of us here that we can take a look at, I'm going to flick my drawing tool on. And let's start with the lows, all right? So what I want to see is when price gets down into oversold, I want to see the moment that it starts to turn back up, all right? So we can see that here. We hold our line over it. We can just see price has started to move back up on the RSI, all right? So that's where we want to be interested. If we then come down and set a new low below that, which we do here, then we're looking for the same. The RSI is pulled back. It's now starting to angle itself back up, right? So that's where we're looking for those opportunities. Now, down here, we've got another situation. Price comes down into oversold, starts to angle itself back up here. So that's where we want to start looking for trades. And then we've got another one here. Price just dips down into oversold and we start to go back up there. All right. So there are our potential long trades. Now we want to do the same for our potential short trades. So we first get up here, then we start to pull back. It's important that we mark all of these as well, guys, right? We don't want to just cherry pick. We're in oversold there. We didn't know this secondary move here was going to happen. So as soon as we start to pull back, that's where we become interested. Then when we breach this high and continue to push higher, then we're interested in this secondary move where the RSI is pushed up again and is now starting to pull back. So where else do we have that? We've got another example here. Again, we want to wait until price on the RSI or the RSI line, sorry, not price, has got up and is starting to decline back down. So if we break that high, we're once again interested. We revert to our RSI here, which we can see we've got a divergence. What else we can use for our divergences is our B Pro, okay? Excuse me. So we're all about looking for confluence, okay? And we can see up here, we've got our B Pro divergence here, here, on this second one here, which saves us getting in from here. We had it a little bit earlier here, all right, and we can see it here on the blue arrow as well. So let me just turn that off. So when we move to the lower time frames, we keep it nice and neat. So we've got one more area to mark out here, guys. So we can see here again, we're up in overbought. Price comes along, starts to decline there. We then set a new high here. Okay, so we're interested in this high too. Isn't it possible to show a full screen? Sorry, Carsten, what do you mean, bud? Is the screen restricted? Or, I mean, we can definitely get rid of the RSI in a second when we're looking for our lower time frame entries. But if there's any visual issues, guys, do let me know. Or if I've misinterpreted that, Carsten, I do apologize. So I'm now going to turn my drawing tool off. We've got our areas that we're marked on. Okay. So now what we're going to look for is on the 1 minute chart, we're going to look for our reversal patterns, right? So if we're looking for longs, let's have a look. So let me give you guys an example, right? Thanks, guys. Thanks for clearing that up, Tony, Karen, Carsten. It might be to do with YouTube, Bud, if you click the full screen element. Again, apologies if I've misunderstood that. So if this is the level that we're interested in, and price is coming into this level, what we want to see is something like this. We want to see the low swept. We want to see the high that sweeps the low. Right, and this is where we would be interested in taking our long trade, because what this is telling us is that it's come down, taken the liquidity, and had the strength to close above the high that took that liquidity from the low. All right, and then we were looking for the opposite for short trades. Okay, so let me pull that on. So hopefully that will make sense, guys. Do let me know if it doesn't. I'm just going to clear this up as well. Now, obviously, the other thing that we can do here as well, we can look left on our charts and say to ourselves, okay, have we got confluence here from anything else like these lows here? Do we expect those to get run and for price to come up? Or are we running into these lows here? And by lows, I mean where price had found support. Because then when we get back up into this area, maybe we find resistance here, okay? But without any of that confluence, if we're just looking at this purely based on our RSI and saying to ourselves, okay, where are we coming up? Where are we going down? Now, I'm going to put a vertical line on here, yeah, just so that we can see exactly where and what part of this that we're trading, because there's one more thing that I want to do. So I want to be looking up here on a 4-hour chart and saying to myself, okay, if we're setting a key high here and that key high gets swept, I want to know about that. So let's mark them and let's make that a thicker line. All right. So we don't get the sweep here, but we do get a sweep here. All right, this again is just giving us the idea of liquidity. And for this to work, what we need to do is we need a clear low or a clear high, and then we want to see a candle push above that or below it, but then close back within its range. All right, and that gives us another opportunity, some levels that we can target on the lower time frames. Okay, so quite simply, we put our 4-hour chart on. We're looking for these extended wicks, the liquidity grabs, like a swing fail, the price to come back within here, yeah? And then on a 15-minute chart, we're using our RSI to pick out shifts in momentum by picking out when it's in oversold or overbought. And then we're waiting for price to come down on the RSI and start to tweak back up again, or if we're looking for shorts, for it to go up and start to pull back. So I hope that is all clear, guys. Let me just give you a second while I pour my tea. And if you've got any questions, please do let me know. Carson, I hope you've got that screen thing sorted, buddy. So, okay, let's move down onto our execution time frame. And for this, we can get rid of the RSI. I'll show you how we can use this for confluence. So this section here, what are we today? We're the 31st today. We take it back to here. So this was on the 28th. So 28th, 29th, 30th, 31st. This represents, now bearing in mind we're only halfway through the 31st. This represents basically 3.5 days of trading. Yeah. So we can see we've got 1, 2, 3, 4 opportunities straight away. What we can always do as well, you can always put your session breaks on if you like seeing the way that the markets are split down into days. All right, but I'm just going to turn them off to keep it clean. And all we're going to do is we are going to look to utilize the pattern that I just discussed with you for longs and for shorts. All right, so here's our blue arrow, right? So we're immediately looking left for the low that has been swept. All right. Now, this low might be close by here or it might be back here, but it will stand out as the obvious low. Now, there's the low. All right. Now we're looking for the high that swept the low. Can you guys see that? Okay, let me zoom in a little bit. So here's the high that swept the low. The reason that we want to mark this, right, and I call this a breaker line. Like I say, guys, I've always said this information isn't stuff that I've just made up. I've been trading this for years and years and years of price action. I've learned from a load of people in the space who are exceptionally good at this. And there's a load of different takes and methodologies, and you'll hear different terminology used and bits and pieces outside of what is standard. I might call something a breaker line, someone else might call it something different. But what we're looking for here, right, is we're simply looking for this line, because if price closes above it, as we get with this candle here, then we execute a limit order, price comes back in, takes it, and then moves away to the upside. All right. Now, something else we can do, and something that I like to do to stop getting caught on the wrong side of these, because this one's worked incredibly well. Yeah. So this one's come in, closed above and shot up, but sometimes we can get caught out a bit early and price can come back down for another sweep. So as long as we've got the patience for it, what we can do is we can then wait for a second one to appear. All right. So the thing that keeps us out of these is, just for example, just to show you, look, we've got this low here, right? And that low has been swept by this high. So why don't we go long here? Quite simply because we haven't closed back above this high, right? That's what we're looking for in terms of strength. So we invalidate that. We then move down to our next low. Yeah. So the low's down here and we say, okay. Now, we can see here that this is the high that swept the low, which, as we said before, becomes our breaker line, yeah? Now, we need price to close above, right? So remembering, this is the last low that's been swept, right? These lows haven't been swept, these lows haven't been swept, these lows, okay? So that's why we're focused on this move. Now, I hope you can all see this, because it does obviously get quite tight down here. But these candles here have closed above. As soon as we get that close, we've already got our limit order set up on BitGet, and then we're looking to execute. All right. So I'm loading up BitGet, I'm getting my charts ready, and I can get them ready beforehand. I know where my order is going to be, right? Because I know the level that we're looking to close above, right? So as soon as we've taken that liquidity, I'm on BitGet, I'm set up. I know what this level is. This is 19,932. Yeah. So I've got my order waiting as price breaks down here, gets up to here, doesn't close. As soon as this closes, I'm clicking enter on my limit order. And then I see price move away, tags it 1 minute later. I want to make sure I've got my stop loss under the price swing low. Right, so entry on this line, which we get on the second candle. Sometimes it takes a little bit longer to develop, which I'll show you with other examples. All right, guys. And then I want to make sure my stops are under this swing low. All right. Now, what's really important with any strategy like this is we want to make sure we've got clear targets. So for me, I'm looking for the up move here, right? Because this is the key standout high for me. So this becomes my target, right? Now, I'm just going to pop a horizontal line on that to show you so we can zoom in a bit. And I wouldn't even necessarily target the highs, right? I'd be aware of that because I'd be expecting if price was going to reverse, something like this, yeah? So then that way we get our opportunity to get out, and we can even then start targeting shorts as long as we hit our criteria, all right? We're not just blindly entering, okay, guys? So what we're then doing is I prefer to target the bottom of the up move. So this up move that led to the sell-off and the break of structure, very similar to an order block. So then what I'm saying to myself is, have I got at least a 1R before we get there? Because that's going to be my first target. We get a lovely 1R. We get a lovely, 2.4R. When we get to 1R, I've flipped my stop loss to entry, so I've de-risked the trade. Sometimes I might take 20% of the trade, 30%. And sometimes I won't. If I've got a lot of confidence in the trade and I'm seeing it move in the right direction like this, we're never at any point threatening these lows, then there's no point taking money off the trade unnecessarily. All right. Mr. Sinks, thank you very much, bro. You too. Karen, London in sunny England. Razoon, oh, buddy. You want to talk about a master of liquidity and volume, guys. If you haven't checked out Razoon's stuff, you can find him on Twitter. You can obviously find him at the Nest. He's one of our traders at the Nest. And this guy teaches me stuff about volume on a daily basis, right? Fantastic trader. Very, very similar style to me, but has a few really, really cool differences, all right? So we're actually going to be getting some video content out together for you guys next week. So do stay tuned for that because, yeah, I mean, it really opened my eyes. And the guy's super clever. So keep an eye out for more stuff coming up. Razoon, thank you so much for joining the stream, buddy. Always lovely to have you on. So I hope that makes sense, guys. There we go. We've got our setup, right? So this is just the first one. So let's move along. Remember, we're looking for our next arrow. Here we go. So here's our 15-minute RSI sweep, right? So remember, like we said, we want a clear and obvious low or high. And for me, there isn't really one here. I don't want to be starting to nitpick around with individual candles and stuff on a 1 minute chart because there's just not enough in there. Mr. Sinks, so there should be something in the description, brother, if you're watching this on YouTube, that can just lower you down into that. If not, you can just go to thebirbnest.com, which is birbnest.com. And then you go on there, you can go to Nest Club, you can sign up, you get a free trial, come along, have a chat with the traders, see what we're all about. We got some brilliant traders writing algorithmic trading systems about volume. We get in-house competitions that are running. Really, we're all about education. We're about education and community, making people better traders, and also sharing our experiences, right? Trading can be one of those places sometimes where it's a lonely place, but when you're surrounded by a good community, it always helps a lot. So let me see. If you cannot find anything, let me see if I've got anything in here. There we go. There you go, mate. So for anybody that's interested in that, you've got that down there. Karen, you are a star. Thank you very much. So now for me, there's not a clear and obvious liquidity grab here, right? This is too high. They've already been run. So have the lows beyond them. So I'm just going to be patient, right? A lot of this and a lot of trading really does come down to patience, all right? And don't beat yourself up if it doesn't work every time. It won't work every time. If it did, then trading probably wouldn't exist, right? So, low. All right, everybody on the same page here. We've waited patiently. We've come up. We've set this low, broken away from it, not swept it, not swept it. Now we've swept it. All right. So here's our first sweep. This is the high. Yeah. So that's the high that swept the low. We now want to see a close above that. We get our close above it. All right. So now we're saying, okay, where's our secondary opportunity? Yeah. So again, we don't want to cherry pick, guys. We've got highs up here. We've got lows. Here's the low. It gets swept, but it doesn't close above these highs that sweep the low. This low gets swept, but we don't close above the highs. All right. Even this low gets swept, right? But what we don't do is we don't close above the highs that swept the low. So we've got no entry. All right. Until, right, we come down, sweep, no sweep of the highs, right? Sweep these lows, no close above the highs. So we get these lows here, right? And what's really interesting about these as well is we can see 1, 2, 3 candles into this. Now we get a sweep of the lows, right? And here, actually, this is beautiful because we've got a really, really, really tight breaker line here, right? And this is what I like about this strategy. This is why I'm employing this for the trading competition, right? Because I want to be setting myself up some really good risk to reward trades. So if we get here, now see this one closes above, then we get the retest down here. So it doesn't always happen the next couple of candles. Sometimes you got to wait. Stop loss goes below the swing low, and we can afford to put it below the swing low because our theory is that liquidity has been run here, right? And if liquidity has been run, there shouldn't really be much more reason for price to come back down into this area, right? Yeah, you do get secondary sweeps and that, but as long as we stick with our higher time frame bias, then we can often find a good entry opportunity. Where's my first target? Here, all right? Nice, clear high. I'm thinking to myself, right, well, I think we might run these highs again. Remember, if we've got liquidity above these highs, maybe we do something like this. Yeah, before we start to break down. But without seeing that pattern emerging, we want to be taking the conservative side down here. And what we can see actually is when we look at the base of this candle, the up candle that led to the change of market structure, again, very similar to an order block, right? Then we can see where we get this little pullback area, yeah? But once again, we've got to 1R with little trouble, yeah? Our stops are now at entry, so we've got zero risk of losing this trade. We get to target 1, which is 2.76R. We take a little bit off the trade there. I often take maybe 40, 50% of the trade there. Stops are at entry, and then I'm looking for extended targets. Now, our extended targets here are all the way up here, right? But I'm going to look to the bottom of this wick because something stopped the market there, right? So if I'm looking for an extended target, I'm going to run it up to there. Maybe it's too ambitious, but we don't mind too much because we've already had good pullback. We can also look for breaks in market structure. And actually, we do get that. We do get the run up. And it does actually go on to take out these highs here as well, all right, which we can see. So do always remember to keep looking left on your charts, guys, as well. A lot of people ask me that question about picking targets, selecting things, find it very tricky. Completely understand what you guys are talking about. But if you look left on the chart and you're looking at these highs, price is often running for liquidity, right? Finding points where there's buyers or sellers. So on this one, we keep ourselves patient. We may have exited a good amount of the trade around here, you know, if we'd started to break down. But again, if we just mark the lows and we're aware of where the lows are, yeah, all we're saying to ourselves is if price here, for example, had come down and started to do this, we could have cut it under here, all right, showing that we've got bearish momentum, to the downside. As it was, we managed to keep ourselves in the trade. We got to our 7.6R, and that's really nice, guys. And this is not to be thought of in a negative way, but for me, I'm thinking when I hit a trade with a good risk to reward, I'm like, okay, it frees me up. It gives me freedom, right? Because if I've lost a trade, I've only lost 1R, right? If I've made 2, 3, 4, 5, 7R on another trade, that loads me up with loads and loads of dry powder. I'm always going to stick to my strategy. It doesn't mean in any way that you should be frivolous or you should be more risky than you normally are, but it gives you the opportunity, right? It gives you a buffer zone. So at the end of the week, end of the month, when you're looking at your P&L, you're looking at your statistics, you're saying, wow, okay, great. You know what? I had a little cluster of losses in the middle. Maybe I wasn't concentrating as much, or maybe the system just wasn't firing. But actually on the trades that I've won, I've made a really good risk to reward. Right, and also we get out of trades if we get to 1R and it reverses on us too. So we've seen that up there. Blubber, quick question. Do you ever get wicked out? Yeah, you do. The idea of this strategy, the development of this, and people that have worked in different versions of this, and the way that I've worked with this for a number of years, is we're trying to or these type of early reversal strategies, you're trying to make sure that you're the right side of that wick out, yeah? So that, you're not, let's just say for argument's sake, entering here, yeah? And then you get wicked out to the upside there, right? That's why sometimes it's better to wait for that second confirmation. But like I say, I'm using the RSI to spot that momentum, and then I'm getting down into the charts to find those reversals, right? Because like we've got here, this is our break of structure, right? And this was our first breaker, yeah? Then we've come up to here. Now we've come back down. We're searching for those lows, yeah? And remember, wasn't this one because we didn't close above this high, yeah? Wasn't this one because we didn't close above this high. These were the lows that we then swept the highs, and we then enter on the retest of that. And again, entry methods can be your own. On the lower time frames and stuff, I know some people prefer to market order. I like using limit orders where possible. But it doesn't mean that you can't kind of take these ideas and plug the concepts into the way that you trade yourselves. And also when you're in the nest and that, guys, stop by and say hi. Come onto the nest chat. You can even drop in on the public chat and stuff. Just, come and ask some questions. There's always the group of fantastic traders there and a really good community as well. So, Tony, quick question. Going back to that sweep, what was the difference between the second block where you were happy to enter versus the lows or wicks to the left? So, this, if you mean these lows here, mate, we didn't have a clear low over here to run. So, if we'd had price action down here, for example, yeah, and then that had run those, then I'd be looking to get on board here, yeah. But I've been stung a number of times over the years using this strategy, trying to be too cocky, but aggressive to get in down at these levels. So what I like to do is I like to wait for a secondary sweep. Now, quite often the secondary sweep happens very close to the first, but the reason that I'm waiting for that is I really want the market to be telling me that it's got the momentum now to push forward. Sometimes we get these moves, which can just be a sweep of the high side liquidity here before it then breaks down further. So you can absolutely do it. Your risk to reward often goes up. All right, you'll have a lower win rate, but you have a really good R2R. So I hope that's answered your question, mate. If you mean these ones here, so let me just zoom in a little bit. If these are the ones that you mean here, then the reason that we didn't enter on these is because we didn't close above the high. That's the high that swept the low. We didn't close above it. We wicked above it, but we have to have a close. All right. Awesome, bud. Awesome. Anytime. Always ask questions, guys. If you've got any, please don't hesitate to put them in the chat. I will endeavour to get round to everyone. And if anyone's got a couple of chart requests that they'd like to see this play out on, let me know. Pop it in the chat and we'll try to take a look at one or two of them, see what the setups are. So I hope that makes sense, guys. So that's what we're looking for. That's what we're targeting. All right. As we can see, we've got these other ones. And now let's look at a situation where we might not have a winner as well, guys. This isn't, there's no strategy, in my opinion, out there is foolproof, right? So I really, really like to show when this doesn't work because it helps us really learn and then we can kind of start to adjust things. So for years and years, I was running the very first breaker box, as I called it then. And then it took me, a few years to realize, hang on a minute, the win rate's down like late 40s, early 50%, good risk to reward. But actually, we can improve that a lot if we're looking for a secondary confirmation. Bobbage, can you check XAUUSD? Yeah, of course, mate. In fact, let's have a look at that in a moment. So just looking at this example quickly to say, okay, well, look, we've got our trigger arrow here. Yeah, and we've got a few other things too, right? Now, when we get that trigger arrow, we have got a clear high that's here, right? And now we've got a clear low that swept that high, right? So that's where we're into. We're saying, okay, here's our first one, pulls back to here. Now, what we can then look for is saying to ourselves, okay, well, here's the next high that swept. Where's the low that swept the high? is down here, and we don't close below. Had we closed below here and retested it, that would have been our trigger here to go short, all right? And sometimes these won't work out, guys, all right? Sometimes you'll enter these and they just won't work. But, you know, it's all about perseverance. And like I say, it's not something that I'm recommending you guys go out and do and start to smash it and stuff like that. Just, you know, just to try and give you an insight of how I'm looking at these and how I'm looking to trade it. All right. So just before we look, we got a couple of brilliant chart requests. Bam Bam Bitcoin. Hey, buddy. Thank you very much for joining the stream. Let's have an IMX and ILV. Cool. All right. Well, we've got a nice request here for AVAX, and we've also got XAU USD, which we'll take a look at as well on a different chart. The other thing I wanted to say is if we remember, we took these 4-hour lines as well to look for possible reversals. Same theory. We see we've run the liquidity here, come back, second run of that liquidity, broken down. Good scalp trade there. Same here, ran the liquidity here. With this one, we had a really, really sharp drop, so we probably wouldn't have been able to get into that. But the theory and the premise is the same. We also notice that we've got our arrows in these key areas as well, all right? So we don't have to overcomplicate things. We can just, you know, take a nice, simple approach. I like to keep things as simple as possible, all right, because it allows us to stay clear of mind and also be a little bit mechanical. Now, when I say mechanical, I mean in terms of believing in our strategy to the point that when we get our triggers, we enter. I'm not a great believer in people that say you should be completely emotionless when you trade. I just don't think that's true. I think some people are better at controlling emotions than others. I do think if it's something that's causing you physical anxiety and that, then it probably means that you're either too large with your position size or you haven't really got enough belief or backtesting in the strategy. But I don't think it's always a great idea to be emotionless. I'm quite an emotional person, for example. And, you know, I like to utilize that with my trading. Hannah, hey, buddy. One of my oldest followers, one of the very first people to follow me on YouTube and Twitter, and a fantastic member of the Nest. Great to see you on here, bud. So, before I bore you all to death, let's take a look at some charts. So, let's start with the XAU. Right, so I'm going to use Oanda, is typically who I trade with for that if it's not a Prime XBT, but do let me know if there's a particular one. So here we go. So let's see how this fits over a traditional market asset, right? So we're looking at the same things. Remember, guys, we're going to look at the 15-minute chart first of all. 15-minute chart we're using to find out when we're in overbought, which is there. And remember, we're waiting for that secondary little pull back. Yeah. And then we're looking down here. So here, all right, when we're in oversold. Here again, when we're in oversold. And we're very much down in oversold here. So we need to look at that one too. And let's just look at a couple of other examples. We've got this one here, right, deep down in oversold there. And then as we said, remember, if we set a new low, we're then looking back to the charts here again. We're back in oversold here. And this might be a really, really good example. Again, new low here, guys, and also touching upon oversold. So we're going to mark that in as well. So not many long opportunities, but we wouldn't expect it on this time frame from gold at the moment because it has been having a little bit of a sell-off. So we've got that. The next thing that we're going to put on there is our 4-hour chart. All right, guys, remember that we said, let's just see if we've got any of those nice liquidity grabs. Okay, actually, we can see that we have one here. So let me just zoom in for you. So remember, guys, what we want to see, we need to see this wick being taken by this, and then the body of that candle closing underneath that wick, which we can see when we mark that here. All right, and we'll become a little bit clearer. And we've also got another one here, right? Again, looking at these on these charts, guys, is a really, really good way to look for reversals and continuations. Look what we've got here, right? So again, don't cherry pick these guys. Make sure you mark all of them because you want to know what's happened with the others, all right? So this is our first wick. But can we see how the body doesn't close within the wick? So that's invalid. We get this wick. And then as soon as the body closes, it comes back in here, then we're looking for short trades, all right? So perfect. We've just got those examples. Let's take a quick run through these. We're going to put that on the chart there. We're going to drop down to our 1 minute chart and we're going to remember our techniques, all right? So we're looking for liquidity to be run. So here's our arrow. We've got no clear low to the left that's been run. Now we're looking across here and we're saying, okay. And guys, if any of this is unclear or you're not following along, do ask me to stop. I'll be more than happy to rerun it. So here we go down, right? We set this low. We set that low, yeah, but there's not running any lows before it. So when we set this low, what we can see is that the low gets run. This is the high that ran the low, but we don't close above it, all right? So this one becomes invalid. So we're then looking for the next low, which is here. We can see the liquidity gets run here. And boom, we get price close above it here, all right? So now what we're looking for, if we remember, is a second sweep of this. So we're looking up, we're looking for any kind of key lows here. So we've got a low here. Price runs it. Where's the high? Is here. This becomes our breaker line. And unfortunately, while the theory is correct, we don't get the retest here. Now, I'm not going to go into this in too much detail, but we can use a technique known as first obstacle or first object, which is where the first down candle and an up move then acts as support. So we would wait for this to be closed above. We would enter here with our stop loss under here. And I think you'd get a pretty skinny trade here. I mean, we've basically come so far away at this point from the move down there that we may be lacking momentum. So what do we get? Okay, we get a 2R. That's not bad, right? That's not bad. But again, you know, I digress. I'll cover this on a different video in terms of what we're talking about with first obstacles, all right? So we've got that trade down there. Obviously, the later we enter these trades as we move away from them, then the higher the risk. So this is our 4-hour sweep, yeah? So with our 4-hour sweeps, we can afford to be a little bit more aggressive if we want to, but let's employ the same characteristics. By that, I mean, if we get a 4-hour sweep of liquidity, it very, very often is a sign of exhaustion in the trend, which means that we could, if we wanted to, enter at the origin. And what you'll often find is you'll get a later retest, right? So here's the low that sweeps the high. Right, we can see price closes below, retests here, and then sells off, all right? But the same principle also applies here because we can see we've got our high, all right? Just about closes above. This is our low. Sorry, it doesn't need to close above, just needs to wick above anyway. What needs to close below is this. And then we get our retest here and then a sell-off. All right, that would have been a nice trade. So you could have taken aggressive entry there, but you can combine these. I mean, and this is what we're talking about in risk to reward, right? So if we're looking across here, we want to find a target over on the left, but there will be one, right, that we can target. We'd zoom out onto, say, like the hourly or something like that. But what we want to do is we want to look at this trade and say to ourselves, okay, if we're running this trade back down until we get our next entry trigger for a long, which is a good way to do it, entry trigger for a short here, wait for our next entry trigger for a long. So if you had some cojones on you and you hadn't shaved too much off the trade, right? Remember, we're going above the prior swing here. Then these are the type of returns, you know, as you would see market structure breakdown there, you're getting like an 11, 12R, all right? And that will be really, really interesting. Jimmy, the mindset master. How fantastic to have you on the stream, buddy. Thank you very much for joining. So we've run our 4-hour liquidity line here. We've closed below the low that broke the higher. We waited for our second entry method here, got a fantastic risk to reward, and we've got a nice 12R trade down into the lows. Now, I'm not saying that I would have been running that all the way down. Like I said before, when we get to 1R, I'm moving my stops to entry, but we can see we didn't get them tested here. My original target would have been these lows, right? And we can see how we get this consolidation around those points, all right? Before price, then it's working out if it's going to, you know, expand and it distributes and it kicks it out to the downside. All right. So let's just look at one more example. All right. Because they can't all be winners. I do want to show you some of the ones that don't necessarily work out so well. So here we go. Let's look at this one, see how this plays out. So with this, we're going to take the obvious low. Now, on really long wick candles like this, sometimes I'll think about taking them because it's showing me there's so much buying pressure underneath. But let's keep it really clean, guys. Yeah, we want to make sure we make this easy for ourselves. So here's the low. Yeah, here's the high that swept the low. All right. Once we close above that, then we're looking to see if we get another liquidity sweep here. So high, there's the low, no sweep, high, low, high, low, high, low. And unfortunately, we just don't get that sweep. All right. We've now got up into a region here where we would either be looking originally at these highs, right? And certainly if not those highs, then the breakdown of this order block here before continuation. So by the time we get up into this region, we've made such a distance away from here. The TA was good. The theory was good. Strategy, unfortunately, just didn't give us our trigger. If we'd been really aggressive and entered on the first one, yes, we would have got our entry. But as I said, in my experience, as we trade this out over time, it's better to wait for second confirmation. So not a loss, but we don't get in the trade. No problem. I'm comfortable with that. All right. So let's look at our next example here. So again, this is back to our RSI strategy, this one, guys. Yeah. So here's the clear low. Here's the high that sweeps the low. We close above that high here. Yeah. Now we're looking for the next low. Yeah. So we can take this low here, for example. We want to see price run, which we get. Let me zoom in for you guys so you can see that a bit clearer. Move that back. So we've got the low. The low's been swept. We want to see price come in for the second time above that. And as we can see here, if you've been using a market entry order, you would have got in on both those trades. I personally wait for my limit order, so I would have wanted to see this correct a little bit deeper, all right, to get the entry, and then we would have had that. Now, quite often with this as well, you'll notice that you'll get a reaction around this area because this whole area here, where we've seen this breaker box form, yeah, can act as support, and then when you start losing that, it can be a sign that price is ready to go down, all right, like we would with an order block. So I hope that has covered that on gold for you guys. We didn't get into two trades, but we did catch two really lovely moves, one for about 2.5 R and one for just shy of 12 R. So I know we had another couple of questions, so let me just pop this back onto a 15-minute. And I believe one of the coins that you guys are interested in was AVAX. So let's have a look on AVAX and let's make sure I've got all my chart testing hidden away. So we've got a nice clean chart to work with. So same principle again, guys. Remember, we're going to use the 15-minute RSI. We want to know where we're in overbought, oversold, right? So first one is here. Second one is here. Because again, we've taken a new low, yeah? So we want to mark that and remembering when it's moving its way back up. In terms of our lows, we've got here, all right, which is our initial. And we also get a little retest of this area here. So we're also interested there. Then we've got some more here. You see this as this comes up. And then we also get a secondary one here as price comes back up into overbought. So we're going to look at those. And then we'll do one more, which is looking down here at these lows. All right, so we get the initial spike here. Then we get the secondary move here once we've swept those lows. And then the final sweep is here, okay? Now, the other thing we're going to do, as we discussed before, we'll shut that down for a moment. We'll move to our 4 hour. And we're just going to be looking for our sweeps, yeah? So as we can see here, we've got some really, really lovely ones to mark out. We've got this one. So remember, for this one, guys, what we're doing is we're looking for our arrows. We're then moving back up on there, yeah? Then what we're looking for is we're looking for these lows to be swept, all right, by the following candle. So like we get with this one, we set this key high. We're then looking for the next candle to come up, breach that high, and then come back down below it. We're doing the same along here, all right? So we can see here, we get this candle, comes back within, that's our first one. This one then drops, this one drops outside of that and then closes back within. And we don't get one here, all right? So let's pop a vert back down here again, show where we're trading from. So now we're going to move to our 1 minute and compress the chart up a little bit and take a sip of tea, but I'm not going to be able to speak anymore. Perfect. So now, nice clean chart. We know exactly where we want to be entering. All right. So prime example here, we've got lovely confluence from two different things. Yeah, we've got our liquidity sweep on the 4 hour. Yeah. And then we've also got our arrows here as well. So let's start with this one here. If we're looking purely based on the liquidity sweep, this is the sweep. I'll zoom in a bit for you guys, actually. So this is the sweep, yeah? Now we're looking for the clear high that swept the low. Yeah, so we're looking for this here. That becomes the breaker. So what we're then looking for is price has closed above it here. So we want to know, do we get another entry opportunity? We've got these lows here, swept by what? By these highs. There's our breaker line. There's our entry. All right. And there's a really, really nice trade there. Break above, re-enter here. And, when we start looking at that again, it's all well and good to look at a chart and be like, yeah, I'd have stayed in all of that. But in truth, I would have been reducing heavily here. All right, because that's the up move that led to the break of market structure down. But then looking beyond that as an extended target, I'd be looking here. Again, up move that led to the impulse move to the downside. So if we then rack that up on our chart and we say, well, our entry would be here. Stop loss under the prior swing low. Target 1, 2.13. Target 2, 7.8. Very, very similar to the other one. All right, guys. So let me just clean that up. Now, the one before proves to be an interesting one, actually, I think, because, yeah, we didn't get the sweep on this one. All right, so we see that low. We didn't come down into that low. Had we come down into that low, we would have been looking for a close above here. All right, and then again, we would have been looking for the liquidity sweeps. But that's the good thing with this sometimes, guys, is that just be honest with yourself and say, okay, well, if we've got the clear low, have we swept it? No. We've got this clear low here, which is marked by a 4 hour liquidity line. We get that clean sweep, right? So it does pay to be patient. And sometimes these things will keep you out of trades that will go and run for the absolute moon. But don't worry about it. There'll always be opportunities, all right? There'll always be opportunities. Focus on saying to yourself, it was good TA. I managed to catch the move, so I'm happy with that, all right? So let's do one more for you on this short. Now, on the 4 hour, we can see we've run liquidity here. Here's the move that led to the run of the high. Now we're looking for our secondary entry. What do we get? Clean high, run. That's the low that runs the high. We've closed below it here, right? So on the retest of that, we get our entry. All right, so remember that becomes our breaker line. And if this is something that interests you guys, I really would recommend playing about with this on different time frames and stuff, yeah, because you don't always have to use as lower time frames as me, because obviously you've got to be pretty nimble here. Now, if that closes below, like I said, I'm on BITGET and I have got my trade set up already. Why? Because I know where that low is, yeah, and I know where the high is. So as soon as that high has been run, I've got 1, 2, 3 minutes to set my trade up. As soon as that candle closes, I'm executing, all right? And in case you're wondering, I'm considering this the low because we've wicked. We can see how price moved up, had a significant drop, moved up, significant drop again. I want to see it retrace at least half of its prior move in order to consider it a new swing or micro low or micro high, All right, guys. So look, we're approaching the hour mark. I'm really, really sorry if I didn't get round to anybody's trades here. Actually, Bam Bam Bitcoin. You had a really good question here about AVAX, didn't you? Enter here, tight stop loss at 19.39, TP1. It said, oh, okay, let's pop that up on the screen and take a look for you. So do correct me if I'm looking in the wrong place, buddy. But you're down here. AVAX, enter here, 144. So around about kind of here. Yeah, this kind of region. So what I'd be looking for here is, let's take a look at our 15-minute chart. Let's see if we got, I don't think we got one of these here, but we could be in an extension of this move here. And if we look at this on a 15-minute scale, and we look at the liquidity being run down here, if we mark this high, right, this is the high or the level that you wouldn't really want to see it go below. Yeah. What you absolutely might see here, though, is if it's coming back in some more liquidity, looking for more upside, maybe it does something like this. If it closes back above this high, then we'd be looking to be trading it into this. And what you'll often see with these moves is how you will trade from breaker block to breaker block. So here's our breaker block here. Then we've got this one up here, which might act as resistance and send it back down. Okay. This move here, which is sent up. This move, which didn't materialize, but still, as we can see, the theory is we've swept these lows. It's acted as support as we've moved forward over here. So I hope that's shown a little bit of insight, guys. Bam Bam Bitcoin looks like this one might be getting the momentum you're after here, buddy. So stop loss down here, 19.39. Yeah, like it under this swing. Entry up here, targeting up here. Lovely job. What we can see here on a micro scale, obviously we'd look to execute this on the lower time frames, is that we've had a nice liquidity sweep here as well, right? So price could indeed be looking to take that move higher. All right. So look, guys, I hope that's been useful. I hope it's given a little bit of insight into how we look to trade, especially for the BitGet trading competition. I would love to see you guys in that with me. It's so low risk and the prizes are massive. I'm excited by it. It's great to throw your ring in the hat with some other traders at some point. And again, you don't have to be risking a lot of money here. Even if you put the minimum in $250, yeah. Now, I'm not saying that's a small amount of money. It's not. I know it's a lot of money for a lot of people around the world, right? But you're not risking that entire amount. With good risk management, you only have to risk a couple of % of it. And off the back of that, you can win. So you risk a couple of % each trade, a few cents, few dollars here and there. As you're then building that up, you stand a chance to win. So if your P&L is larger, you don't need the same amount of cash. Someone could be up against you with $2 million. It doesn't matter because it's all based on the percentage, right? Then you can pick yourself up a $2,000 first prize. And they're running it again next month. So do come along, take a look. We've got some information down in the description. We've got the link running across the bottom of the screen at the moment, how you can sign up for your free trial. Come along, say hi, see what we're all about if you're not already in there. You can see by the people that have joined and participated in the stream today, we've got a fantastic community of people covering everything from algorithmic trading to volume traders to qualified MPL psychologists, who also happens to be a pretty tasty trader himself. All right, so come along and say hi. Really love to see you guys in there. So I hope this has been useful. I'm going to be live again next Wednesday, and I think we might look to run another one of these sessions. All right, but do get in touch. Let me know if you've got any suggestions or anything you'd like to see. And if not, I very much look forward to seeing you guys around the nest.